Welcome back to another stock market open. We are alive again to see what's going on in the world of the stocks after Thanksgiving numbers came in higher. Thanksgiving numbers coming in higher than expected, that's for sure. A lot of folks were looking for negative numbers. A lot of folks were looking for big misses here on Black Friday. Looks like we ended up coming in positive. MasterCard, not as positive though as some had hoped. MasterCard coming in just about 2.5% positive on spend. Foot traffic at U.S. retailers up 2.1%. The winner really seemed to be online again, with Adobe indicating online sales were up just over 8%. Of course, this comes at the same time as we're seeing credit card delinquencies back at kind of levels that peaked out right before COVID. We're seeing credit card utilization peaking out like what we saw right before COVID. So we're kind of back to some of those peak numbers, a lot of that excess spending that we saw before COVID is sort of back. The excess utilization of credit cards and debt, delinquency rates kind of back to 2019, which doesn't necessarily say that we are at some kind of scary levels, but it's certainly not as low as things were, and people definitely liked the lower delinquency numbers. So now we're taking a peek at how the stock market is behaving for Cyber Monday. Today's Cyber Monday, which is really exciting. We've got Treasury yields on the 10-year down about 3 basis points, 4.55. Oil, love seeing a 0.5% drop on oil. Gold back over 2,000. This is as Hamas is releasing more hostages. Israel is considering extending the pause predicated on more hostages being released to try to prove to the world that Elon Musk is not an anti-Semite. He is, which I don't believe. I think most people don't actually believe he is. Even the people who think he made a little oopsie doopsie, I don't think they think Elon's anti-Jew. But Elon to try to fix that impression is in Israel, looking at sites of the attack from Hamas with Israel's prime minister. At the same time, we have strikes going on in Europe affecting Tesla, still on the smaller side, but some folks concerned about what this might mean for the future of collective bargaining for Tesla. Tesla stock doesn't seem to care though much, up about 83 basis points right now. Enphase down about 63, so about a fair split there. Coinbase down about 1.13 as BTC is down a little bit. Last I checked, 37.4. Last I checked, now sitting at down some more, 36.9. A little bit of a trend down here. Still no BTC ETF. A lot of enthusiasm for that. You've got Elon, by the way, discussing that he'd like to help rebuild Gaza in a chat with Benjamin Netanyahu. There were also discussions about using Starlink to bring internet under the direction of the Israeli PM to Gaza. In about, let's see here, 2.5, no, actually that's 1.5 hours, we'll be getting new home sales, and that'll be the data we get today, including Dallas Fed manufacturing activity, which will come out in closer to 2 hours, 7:30 for that. We are also taking a peek at, looks like some earnings movers. We've got, Okta's not really moving much. Foot Locker, what's Foot Locker doing? Foot Locker down about 4% here. Let's see if Foot Locker had some particular earnings to discuss. Foot Locker. Let's see here. Foot Locker. We have City downgrades to sell. Wyatt got the boot. Lols. Okay, yeah, no particular earnings here. Just Foot Locker implied 15% earnings, but when? Dropping on suspected EPS miss. So they're like pre-punishing them. How rude. Yeah, their earnings are in 2 days. We think that it'd go down. Well, get downgraded right before. That sucks. All right. Let's see. So looking for really changes in the market here. I think the easiest thing to do is going to be to look at our 5-year break, our inverted yield curve, and our odds of rate cuts. So let's look at the Fed rate monitor to see what we're looking for, the odds of rate hike versus cut. Right now, it looks like we're 92.6% certain no rate hike in December. Maybe a 10% chance of rate hike in January, but we start pricing in a 23% chance of a rate cut by March. By May, we start pricing in an over 85% chance. Wait, let's see here. Yeah, 85% chance of a rate cut by May. So some pretty serious price cut expectations there. 85% by May. Of course, only expecting about 25 basis points, 5-year break even, back down to 2.2. So kind of on the low end. You've got the 5-year forward break even. Where are we sitting on the 5-year forward? We're sitting at 2.28. We'll go to the 10-2 Treasury inversion, which, of course, the bears say guarantees a recession will come. Negative 48 basis points. It's been right in the past, and especially as deep as we're inverted here. We'll see what happens. And and then, yeah, of course, the 10-year right now down about 3 basis points. Okay, very well. So then we have Binance suggesting that there could be a big turn after the Binance settlement. Of course, you've got Binance CEO CZ basically begging the judge to allow him to leave back to the UAW. UAE rather, not the UAW. That would be the United Auto Workers Union, UAE. UAE is interesting because it doesn't have an extradition treaty, and there are expectations that CZ is going to go to jail anywhere between 1 to 10 years, potentially in prison. And that's just the DOJ complaint. That doesn't even cover what potentially could happen with the SEC complaint. Looking at some the tape here, a little bit of China news. No, none that particularly interesting. Okay, yeah, never mind. All right, let's listen in over here for a moment and see what they're talking about. Crown Castle.
Saying it wants to push for changes to increase the performance and boost the stock price.
Lawyers for ex-Binance CEO Changpeng Zhao are urging a U.S. judge to allow him to return to his home in the United Arab Emirates until he's sentenced for violating anti-money laundering rules. The Department of Justice had asked the judge to bar Zhao from returning to his home because the U.S. does not have an extradition treaty with the UAE, and it may not be able to secure his return if he chooses to not come back for sentencing. Yep. Zhao's lawyers have argued that allowing him to return home would give him a chance to care for his partner and 3 children and prepare them for his sentencing. He faces up to 18 months in prison as part of a plea deal with the United States. I believe they actually could technically sentence him to longer, up to 10 years. But if it's more than 18 months, he has the right to go back and challenge all of the agreement that he originally agreed to. All right, crude oil is down about 8%.
That's a little messy. I want to hear a little bit more about that. But anyway, I'll keep listening here.
An important OPEC meeting would be delayed to this week. Things recovered after that, but you can see right now that prices are off once again this morning. 75.15 is the latest tick for WTI. Halima Croft is RBC Capital Markets Global Head of Commodity Strategy and a CNBC contributor. And Halima, you've got some thoughts on why this meeting was delayed and maybe what happens behind the scenes.
Okay. The former CEO faces as many as 10 years in prison, but is expected to get no more than 18 months under a plea deal that appears to have saved him from the harsh penalties other crypto criminals have faced. That's potentially why he rolled over on the, $4 billion to not go to jail longer. Aha.
The underperforming African countries. And 2 of those countries are saying, look, we want the opportunity to produce more next year. So they have to square the books before they can address the issue of, is there going to be a deeper cut? Are they simply going to extend the unilateral cuts by Saudi Arabia and Russia into next year? So again, there's some uncertainty about when we're going to get this sort of agreement with the African nations and they can move on to the bigger issues at play.
Would the most likely scenario be that they are given the right to go ahead and produce what they weren't producing before? Or, and what does that mean overall? That the cuts aren't as deep next year?
I mean, I think they're going to find some way to appease, particularly a country like Nigeria. Nigeria has been in OPEC for decades. They do not want us sitting up and falling out with the producer group. So maybe they basically say, we can see what you can do next year. We can reassess this later. So I think they're going to find some type of solution. Angola has always been a trickier member of OPEC. They're a newer member. I've been at multiple meetings where in the middle of the night, the Angolan delegation walks out. And so the question is, can you get Angola across the finish line? But they're not a huge producer. And so there's not as much at stake with a country like Angola. Of course, they want everybody to have a happy, group photo, but it's not that material if Angola basically goes its own way. Again, I expect them to get everything together, though, by Thursday.
I just keep going back to the idea of how powerful OPEC is or isn't. I know that's gone back and forth over the last few years, but the United States is now producing more than it ever has in history. And you've got potentially a lack of demand from China right now. It's been weaker demand than had been anticipated. Does that weaken OPEC Plus's hands significantly?
I mean, it raises the pressure on OPEC in the sense of if you have a
Okay. So I'm just reading the 18-page agreement between the United States and CZ, and basically, it seems like the court is able to conclude that the sentencing or the penalties that they're encouraging are either appropriate or too light. In other words, the statute could call for a punishment of up to 10 years. However, it looks like they're pushing for less on behalf of CZ, so that way they can, get more of a, or that's how they were able to entice him to comply. Basically, like, oh, we'll put in a good word for you. That'll be interesting to see how exactly that ends up playing out. Oh, well.
Yeah, I mean, it just, every time they say they're going to cut production, it just means somebody else wins more market share, that they're going to keep taking it for them. And I would think that would get really frustrating, particularly at the Saudis, who are probably the ones doing the bulk of all of this.
I mean, there's certainly, I think they certainly want greater burden sharing across all of OPEC. So again, I do think if there's a deeper cut on the table, they're going to be looking for other members, other producer groups to chip in. And again, I think it is going to be interesting to see what happens next year with Iran, because they did see significant growth this year. And the question is there going to be an effort to tighten up those sanctions? But you're absolutely right, Becky. I think
the court is not bound by any recommendation imposed here in the plea agreement. This is a big 18-page plea agreement outlining that he's basically admitting to being, obviously in day-to-day control and, admitting to amounts of issues here. Defendant prioritized Binance's growth and profits over compliance with the law, telling Binance employees that it was better to ask for forgiveness than permission in what he described as a gray zone. Defendant willfully violated the Bank Secrecy Act. This is all stuff he's agreed to. Okay. All right. Lacking controls, AML, sanctions, terrorist organization, sentencing factors. Again, they're recommending less, but the court could say, sorry, we disagree, which will be really interesting if they got him to sign on a lower number and then they end up, courts end up imposing a larger number. Kind of wouldn't be surprised, but I feel like that would also weaken the court's ability or institutions' ability to secure plea deals in the future. So probably good to at least remotely honor the plea. We'll see.
don't think they want to be accused of allowing Iran a free hand to support groups across the Middle East that have caused so much turmoil.
Halima, thank you. It's great to see you.
Thank you.
When we come back, we'll talk Thanksgiving travel.
Sorry. Okay, so let's find out what else is going on. Right. So how about we go see some of the goods? Honestly, it kind of seems like a little bit of a boring morning, but we'll find out what's going on. Sometimes boring mornings are good mornings. So let's see. Biden plans to skip the COP28 climate summit in Dubai. Rishi Sunak interview. Musk over in Israel. Stock safety nets misfire. What is this? Billions wiped out as stock safety trade on Wall Street misfires. Dividend ETF flows near record lows following last year's boom. Yeah, somewhat makes sense. Yeah, dividends drive me nuts. It's like you're just begging for taxes. If for certain people it makes sense, especially if you can get preferred dividends, you need cash flow. But it's tougher in a growth portfolio, unless you want diversification. I could see that too. Part of your portfolio diversified into divs, I suppose. All right. Let's see. How about even Bloomberg is being a little boring with their cover here. Usually we get some juice. Never been a better time to buy an electric car, says Bloomberg. Boy, it's really getting a little boring over here. How about Barron's? What do we got over here? Citi, JP Morgan rank highest for digital satisfaction. Okay, that's your cover headline. The tech rally isn't done, says Barron's. Let's see what they think. The rich are about to get richer. As the year wraps, technology stocks are likely to keep heading higher, says Barron's. Ooh, yes. Feed us more confirmation bias, please. The NASDAQ is already up 36% this year, but that's still 12% off its record peak, not inflation adjusted. And there are reason to think the technology sector can gain further ground from here. Most important, the rally looks ready to broaden beyond the stock market's largest names. The strengthening dynamic for tech dates back to the horrible year that was 22, as you remember, but would prefer to forget. The index fell 33% last year as losses piled up. Conditions shifted in 23 with the Fed almost done with rate increases, the potential for lower interest rates, shortages down, AI-fueled rallies. Became clear that playing in the AI poker game would require deep pockets. Yeah, that's the delicious part, is that the deep pockets keep spending. Spend. Bullish for not only the Magnificent Seven, but also potentially a broadening out with trillions of dollars on the sidelines. Institutions are bearish, but there's a soft landing on the horizon with the Fed set to start cutting rates. The spending environment for digital advertising and IT infrastructure is robust and upticking. There was an advertising guy on CNBC this morning, and he was talking about how advertising really bottomed at the end of 2022. One of the phrases I like to sort of describe the insanity we've been going through is the idea of rolling recessions. How the freight recession is over, the advertising recession is over, the chips recession is over. Unfortunately, now you're kind of still in like an automotive recession and a green energy recession. That's like your solar market for sure. So you're still rolling on some of these recessions, but who cares? They're not all coming at the same time. So you don't have a market-wide recession. You just have each segment going through their little teenage years of this recovery, and they're having their little freakouts. All right, not necessarily horrible. Okay, so Microsoft bull. Okay, I don't like. I'm not in on Microsoft. But Microsoft has probably the most glorious financial statements ever. Like if you want to study what good financial statements look like, you look at Microsoft's financial statements. If you want to study what bad financial statements you look like, you look at like ChargePoint. Oh my gosh, you want to see a contrast of financial statements? That's what you look at. It is so extreme. Oh, by the way, the Gold Courses Live. That's the whole Noob vs. Pro crash course. I swear I am like caffeine poisoned. I filmed like 30 stack hack lectures and 10 hours of Gold Course. And that was a lot. And when I say 10 hours of Gold Course, I mean 10 hours of edited content. So it took even more to do it. I mean, I did not leave the studio for, I feel like, certainly not mentally for a minute. I did physically have to because I couldn't stand it anymore. But yeah, I was up till 3 a.m. yesterday getting all this stuff up, but it's up. It's like, yeah, I think we're like 28 stack hack lectures up. 10 hours of Gold Course content are up. Oh, I feel dead. I feel gutted. But I also have like this, like, I feel like I ran like a speed mile. You know that feeling where you run a mile really fast, you know, because they make you do it in school or whatever, and then you got like that pain in your chest, and you feel like you want to vomit, but you also feel good that you got it done. It's kind of that kind of feeling. Yeah. So yeah, I don't know why we're talking about that. Let me just see here. What else? Oh yeah, that was the end of the Barron's article. All right, what are they talking about over here? Travel outlook. What is this?
Acceleration of demand as consumers were trying to catch up. And so we moved through a very, very busy summer, especially a lot of outbound travel, consumers traveling to Europe predominantly. And now we're seeing that flow kind of move back in and going to typical destinations like Florida, like Cancun, Mexico, Hawaii, where U.S. consumers are typically traveling in the holiday period. So I think very good, solid demand, especially moving into the early part of 2024. But we are seeing some softer periods, obviously, in the shoulders. A lot of the airlines came out and announced their earnings recently and commented on that holiday demand looks great, shoulder periods returning to some of that normal cyclicality in travel demand.
Is there a reluctance, or are U.S. consumers less likely to want to travel overseas right now, maybe because of geopolitical events?
Anytime we see a major event take place, there is a little bit of a holdup in demand for a couple of days, but really that returns and bounces back pretty quickly. So there's still very healthy demand for consumers traveling to Europe and to Asia. And so those markets remain very healthy. So worldwide, across Booking Holdings and our portfolio of brands, including Booking.com, travel demand remains healthy and strong.
Priceline has an AI.
Steve, is this commodity, Steve? I mean, the icon's got a rock. I think Steve's pissed. Steve's not very happy with me, Kevin, here. Holy ho! When we like Steve. Even my son, he's like, where's Steve? Is Steve back? Everybody likes Steve, but Steve's pissed today. I don't know what happened. The rock's down. The uranium's doing good. I know that. To get on uranium. I don't know if the other ones aren't doing well, but anyway, what is this? You basically can't be wrong if you predict a rolling Nike swoosh recovery. Volatile Nike swoosh recovery. And yes, you can be, because stocks could go down more, right? Like, I've been saying volatile Nike swoosh since December of 2022. That doesn't mean new low. You can't have a volatile Nike swoosh with like constantly hitting new lows, because that would be like an inverted volatile Nike swoosh. So let's see here. You keep adjusting the timelines. I will admit everything takes longer, but there's not going to be a second wave of inflation. You're wrong about that one. There's no return of inflation, but yeah, man. I know lithium's been plummeting. I know there are a lot of people who are pissed about that. Lithium prices, that should be a tailwind for the EVs. Let me see the BCOM index. BCOM's not doing that bad, is it though right now? Bloomberg Commodities Index. Forgive me. I don't pay attention to commodities that much. I know I don't understand them that much. Yeah, BCOM's not doing that bad. I mean, sure, it's off its peak, but it's at 100. It's still above its 21 levels. Let me go a little further back. BCOM Okay, okay. So we're like 2014 levels here. All right. Lithium tanked, uranium's doing well. Yeah. Regarding the second wave of inflation, didn't it take years for the second wave? I mean, here's the thing. Talk about the second wave of inflation was built like it's a comparison to the 1970s is what it is. And in order for us to have a 1970s style second wave of inflation, we really have to believe that the failures of the 1970s are repeating themselves. Remember that in the 1970s, we were just ending the use of price caps. Like in 68, we were using price caps, and it was like moronic to be using price caps because you're literally falsely preventing inflation. So when you took the cap off, of course you had like a jack in the box come out, and then you had inflation. Problem with that is you had that sort of jack in the box lid pop at the same time as you left the gold standard. So people were like, oh my gosh, paper money sucks. Well, that coincided with removing price caps. Then you had an oil crisis. And so oil prices went up. So gas prices went up. So people got really pissed. And then you had a loosey-goosey Fed that's like, oh, it's not that bad. You know, the big thing is, you know, like, and we'll talk about that. But you had a Fed that's like, oh, we don't really have to worry about inflation expectations. Inflation expectations were much higher in the 1970s than they are today. The fact that we have 2.2% 5-year inflation expectations tells us at least the bond market is not pricing in a resurgence of inflation. Otherwise, expectations would be way higher, and we'd be getting Paul Volcker. Jerome Powell loves Paul Volcker. Everybody hates, you know, Aaron from the mid 70s. So the Powell crew and the Fed today will do everything they can to avoid that from the 70s. So really, when we think about a second wave of inflation, most of the time, I think actually pretty much only of the times you could compare to the 70s. But the actual fundamental features of what we were dealing with in the 70s were so vastly different from today that there is very unlikely to be a second wave of inflation. And I know that the response is, well, you know, the Fed's going to start printing money again. Yes, absolutely. The Fed will start printing money again. And then people say, and then if the Fed prints money again while the economy's booming, then that's going to cause inflation, right? No. The Fed printing money and a strong economy does not produce inflation. What it does is it fights deflation. So, like, you're basically just barely trying to keep it up to prevent going negative. Now, is that fair? No. Technically, we should be deflating in a capitalistic economy, but that rewards savers and not debtors, and that ruins the whole game of fiat. You know, we're supposed to be able to print our money away, like our debt away. And so we have to have a little inflation. So we print money to have a little bit of inflation, but just enough. So is that fair? Like I say, no. Is the game rigged? Yes. Does that mean we're going to go back to a second wave of inflation? Highly unlikely. Does that mean that there has to be a big problem? No. Can there be? Sure. We could get a big jobless recession, and that's going to suck. If we get a jobless recession, we're screwed. That's what screws us, would be a joblessness recession. That's very bad.
I really see a lot of things that are not so bad, Sylvia. I'll let you list them, but among them...
Yes, Steve. That's the only reason I know uranium is up, because you forced me to buy uranium, and I'm still holding it.
It's not to like. You think the market continues since October, it's been doing better. You think that's going to continue?
Yeah. And what do I think about the U.S. having to print more and more to service its debt? Yes, that's correct. It will have to print more, and it will. So yes, fiat is a problem. It's backwards. I know it. Like we can fight. We could fight that all day long. And I will just agree with you that the whole fiat game is rigged. But let me be real about it. I'm going to look at how the game is rigged, and then I'm going to go, okay, I guess I just need to be in assets that are insulated from the rigged dollar game. And what are those? Stocks and real estate, baby. Stocks and real estate. I don't have to worry about it. But yes, Steve. Yes. Steve, okay, to credit Steve, he did. He was right about uranium. He was right. I will put it on the screen for him because I know he wants to see it. I know Steve wants to see that his boy Kevin still has the $1,000 or whatever of uranium he made me buy. It's right here. Look at that. Cost $1,011. Market value $1,300, up 29%. That's you, Steve. You made me $296. I can't be mad. I'm not. Okay, a lot of people now spamming Bitcoin. That's to get away from rigged fiat. So I don't really do currencies. And I kind of see that, or like commodities. I kind of see Bitcoin like gold, like a digital gold. Gold goes through these weird, like, let me put it this way. We've had so much inflation. The fact that physical gold with a finite supply is not up more really confuses me. It really, really confuses me that physical gold is not substantially more expensive. So, and I want to hear your comments on this because it's a thesis that I have. It's not like my base case, but it's something I think about. Okay, so I go over here. We've had lots of inflation, right? Why is gold still so low? Okay, gold has been, at $2,000 in 2020. It's been at $2,000 in 2011. So in other words, over 10 years, gold has done absolutely nothing. Why? We've had so much freaking inflation. So point is, I believe, and I don't think this is my base case scenario, but I think there is a potential scenario where Bitcoin trades sideways for a very, very long period of time, even though it's approaching that limited supply, that finite supply. So does gold, and it just ain't moving. So I don't know. Maybe there's something different here. Maybe it's a scam, and we're actually mining much more gold than we think we are. It's obviously not transparent like Bitcoin. I don't know. Yeah, I mean, of course, right. Yeah, gold isn't finite, suppresses real gold price. Gold is you're right, not 100% finite like eventually BTC is, but it is substantially harder and harder to get more and more of. So it is approaching the finiteness like Bitcoin. Every bit of new gold is harder and harder to get. It's very similar to Bitcoin in that sense. We just don't, like, there's not somebody who's like, this is how many ounces are left. If like God came down and said, here's how many more ounces of gold there are to mine, and it's getting harder and harder to get all those ounces of gold, I don't know if you've if you really go anywhere here, but I do think that end of the year, or you get a BTC approval longer term, you're probably at least in the 40s. So I don't disagree with that. Take those $200 and buy Jack a gold coin. Is that what you want me to do? Is that Steve's financial advice? Steve, I'd love to. But how much? No, I want, like, it's got to be like an ounce gold coin. Why don't I just liquidate the whole position and buy him a gold coin? I could do that. Actually, I wouldn't even be able to afford. You know what? When this uranium appreciates to the price to where I can get Jack a gold coin, that's what we'll do. We'll get him a whole 1 ounce gold coin. That's what we'll have to do. All right. So let's listen to their transition here. Who doesn't love transitions?
Good Monday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Futures a bit red as the S&P comes off 4 straight winning weeks, the longest stretch since early summer. A busy week with PCE Thursday, Powell on Friday. The market assesses Black Friday sales. Our roadmap begins with the retail record. Black Friday shoppers spending nearly $10 billion in U.S. online. Big gains year on year.
Plus, signs of a strong start to the holiday shopping season are sending Shopify shares toward a 19-month high. Shopify's president is going to join us in just a few minutes. And the bulls are back. Global stocks headed for what would be the best month in more than 3 years.
Let's begin with the holiday retail and the consumer. According to Adobe Analytics, Black Friday generated a record $9.8 billion in domestic online sales. That's up 7.5% year on year. Reports cite strong demand for electronics, smartwatches, televisions. Meantime, MasterCard Spending Pulse says Black Friday sales up 2.5% year on year. That excludes autos driven by jewelry and apparel. Got some buy now, pay later metrics, Jim, out of Adobe as well.
Yeah, and I saw a firm ticking up. Carl, what was supposed to happen this year was rates go higher, people spend less, Fed wins, soft landing. David, the spending would indicate that there really can't be a soft landing, not with this kind of strength.
Yeah, I mean, I always have a hard time on this day in particular making sense of some of the early data. Although it does seem quite positive,
right?
Other than this one outlier at Morgan Stanley, where they seem to say their channel checks indicated that things were flat to down. But again, I don't know what channels they're checking.
No,
and we are going with. I mean, at this point, you can obviously measure credit card, and credit card spend is the way most people do, except the lowest end where they may be using more cash. But there's the Morgan Stanley research note, which kind of throws cold water on this idea. But Jim, you're right. It does appear that we've gotten off to a strong start. Today, of course, is Cyber Monday. We'll see how that fares. And everything gets lumped together at this point. We don't really talk about retail as in-store versus out-of-store as much as we may have once done when we were measuring the growth of digital, which is now obviously enormous.
Well, look, we had this Amazon game. Amazon paid, reportedly $100 million for that game. Did more people stay home and shop? I mean, that was kind of like a celebration of shopping. I think.
Hey, listen to this. Powell speaks in fireside chat. Powell speaks in fireside chat at looks like 7 a.m. in Atlanta. And there'll be a live stream for it on December 1st. And then there'll be a roundtable discussion at 11 a.m. Not sure if there'll be any real entertainment out of either of those. But that's Friday. Okay, that's interesting. That is worth paying attention to. All right. When does the dollar peak? I mean, theoretically, the dollar should peak as treasuries peak. So I agree that should be pretty close. Let's see here. Co-stream of Kevin and Steve. That's what we got to do. It's like diamonds. They control the media, which controls the demand. Yeah, that might be true. Yeah. Don't mention the record Black Friday sales because everything costs more. Right. Yeah. No. Full diaper daddy. You're 100% right. Like, yeah, when they're like, oh, sales are up, 8%. It's like, well, minus inflation off that. Yeah. Guitar Dan says, I shorted S Kevin. Okay. S Kevin. Okay. Gold failed many times as global base of money. Too many flaws. BTC has all the same properties without the flaws. Nice. Elon SpaceX can mine asteroids for gold. Oh, okay. Costco's gold bars, I think they limit them to like 2 per customer. I need a Costco membership. Oh my gosh. This is these comments. It's funny. It's good. Kevin, the fake tan. Who's fake tan? Me? Do I even look like I have a tan? I think that's more of what I'm interested in knowing. Anyway. Goodbye for Redfin. I think it's very difficult to buy real estate exposed stocks before volumes return. Now, at some point, they'll be at a bottom, of course. And as volumes come back, these things will start skyrocketing again. But I don't know where that bottom is, man. You've got Rocket Mortgage, $9. Weren't they down at like $6.80? They're $5.90 is how low they got. So you kind of already had a bottom at Rocket Mortgage, but do you want to be in these now, or when do you want to be in them? I mean, when are people going to start going nuts again for loans? I don't know. When rates are under 6, under 5, under 4. Who knows? It's anybody's guess. Redfin. Dang, Redfin went all the way down to $3. Remember when that sucker went under $10 during the pandemic? I bought some then. I think I sold it for like 30, 35 or something like that. But anyway, yeah, it's at 687 right now. You really need volumes to recover. Oh, well. Yeah, just close that door. I was listening.
And I said, how you doing? He said, inventory. I said, well, no, I mean, I'm just a big admirer of your work. He was like, Mr. Inventory. But that's all right. He's a great guy. He can get away with saying inventory.
He did say, what, 40 some odd Black Fridays he's witnessed as a working adult, and said that we've trained the consumer to wait. He thinks, I think they will wait for prices to get better.
I think you're right. I think they look, there are people who actually pay real close attention.
What was it like meeting Jim Cramer? Well, it honestly, it came as a surprise because I was walking, like, I have a very fond memory of walking into the New York Stock Exchange because it was like walking into the mining guild in RuneScape, which I'm wearing the RuneScape sweater right now. So it was a really cool moment. But anyway, he was, when I was walking out we were going to go shoot like a little video clip. Jim was checking in at the little security booth. So it felt like I kind of met him at the door of, almost the door of the mining guild. And I was like, oh, there he is, just showing up for work. It was cool.
By the way, far in excess now of both UPS and FedEx, which, by the way, are following a somewhat different strategy. FedEx obviously stopped delivering for Amazon quite a number of years ago. UPS, still Amazon represents 11% of their business. But Amazon, you see the trucks everywhere now,
Well,
right?
look,
And
I ordered.
There's a reason for that.
I'm a big Jack Reacher fan. Lee Child. There's like 29.
All right. Anyway, if you haven't already noticed, HouseHack has posted its first video on the HouseHack YouTube channel. I believe that's linked down below in the video that we're in right now, which should be quite useful for you. Yes, it is, at HouseHack Homes. So you'll see we posted our first video on that YouTube channel. It's a full explanation for HouseHack. A lot of people have been asking for that, so there it is. We do have, obviously, at meetkevin.com and StackHack, awesome Cyber Monday sales. So go check those out. Go to meetkevin.com to check them out. We got to update Black Friday. Oh, why is the wording not updated yet? This feed isn't updated yet. All right, we'll make sure that gets updated. But anyway, yeah, we just changed it to Cyber Monday. Anyway, so we'll get to the bottom of that. And what else? I'll check with El Team. And then we have, let's go see what's going on in the pre-market here. So pre-market. Let's see what we got. Okay. So let's take a look at some numbers. We have, let's see here. Okay, there we go. Okay, so, okay, Affirm's up 3.5. We've got Invitae, boy, penny stock now, 55 cents. You've got Amazon up 81, Etsy up 70. This is interesting, actually, seeing the retail stocks move a bit here. You've got Pinterest 1.36, Etsy up 0.85. You know, I'm curious about when HouseHack shares will be beginning of next year for the share certs. You know, there's really like a share certs. It's just like a little like you have your shares, you have your contract, right? But the little shiny certificate, that'll be next year. But yeah, it doesn't make a difference, but you will get it. It would just be the beginning of next year though. So, but anyway, it is interesting seeing the retail stocks move after Black Friday. So I like seeing that. So you've got Amazon up 80 bips. Etsy, I want to see that Etsy bottom. Oh yeah, look at that. Look at that. Etsy sitting right there. Roughly the bottom there now. You've got also. One sec. Okay. So, okay. I want to see more retail. Here's a firm. Oh, I think, CNBC was talking about a firm having come out with numbers, but I didn't actually see those numbers. A firm up after Adobe says orders using BNPL are up. Okay. A firm sees BNPL Cyber Monday spend up 18.8%. That's the forecast. They think BNPL will hit an all-time high Monday on Cyber Monday. That's today. Hey, we have BNPL at meetkevin.com, by the way. Let's see. We've got the gold course is live, by the way. So the pre-sale's over, which is great. And you could get in at meetkevin.com. Trying to get some more data here. Because a firm we know is off its bottoms pretty well. It came off 8. I mean, in pre-market's up at $27 now. It's 3x from the bottom. And their CEO is not seeing like a bottom in sales, at least what they mentioned in their last earnings calls. They have, or rather, like they're not seeing sales decline. A lot of people were fearful that sales were going to keep declining even before the holiday, Black Friday events here, and they haven't seen that. So I thought that was fascinating going through their earnings call earlier this month. Question now is, does the buying spree continue with this ultra low VIX that we're seeing right now? The VIX is as low as we've seen it in early 2020. I want to see the volatility next. Let me pull this up here. VIX. Yeah, look at that downtrend. Wild. We didn't see a VIX this low since January of 2020. Crazy. Got a jet. All right, see Steve. Q star for BTC mining. Would I ever consider a covered call in an ETF? Probably not going into like a bull market. I think that's a good play in a bear market. In a trend down market. But if I'm thinking volatile Nike swoosh, why would I want to be in covered calls? I'm just going to keep getting called out, which is fine. I get it. Then you kind of just roll. But why would I want that? I don't know. I feel like I'm, especially as volatility is going down and prices going up, I feel like I'm getting double burn. Not to say that you'll lose money. I'd rather just be long than, short, which is what you really are with a covered call. It's a form of a short. Oh well. Okay. So fascinating. Tesla's holding on to about 35 basis points. So what's driving the NASDAQ down then? 25 bips. So some small caps here. Coinbase, 236. Where are the big boys? Palantir's holding on to $19 barely. We've got John Deere, Intel down about 0.5% here. Alphabet 0.5%. Okay, so it looks like some of the big boys are down. There's Apple 30 basis points. That must be driving us down a bit. Nvidia down about 23. There's Trade Desk sitting at 66. Okay, all right. So Jerome Powell speaks Friday morning with some commentary, 7 a.m. So mark your calendar for that. I'll stream that live on this channel. I'm not going to go live on the Meet Kevin channel with that. So it'll be here. So make sure you're subscribed if you're not yet here. Yeah, I know it's going to take a little minute for people to remember or see and notice the Meet Kevin live channel, but we're going to do probably almost all live streams here, trying to transition them over here. Automotive capital structure is signaling a recession conditions ahead, leaving our cautious relative value views unchanged. Our focus is on defensives like Ferrari, Jaguar, and Toyota. Heightened concern about Lucid, McLaren, and Carvana. That's a Bloomberg Intel ping right there. It's got to be tough to sell cars in this sort of environment. Your interest rates are just insane. Q4, I think, it could be pretty nasty for a company like Tesla. I mean, you have an incentive to wait for Jan 1 to buy for the tax benefits. The highest interest rates ever for Tesla's existence were during Q4. Like, if they were able to sell cars in Q4 and they beat in Q4, that is so bullish because that should be the bottom. Crazy. Okay. Listen here for a moment.
Over the last 3 days, because it's quite remarkable.
Sure.
We saw peak sales per minute globally on Black Friday was 4.2 million per minute. That was right around noon on Friday, 12:01 Eastern time. And just to compare, last year peak sales per minute globally on Black Friday was about 3.5 million around the same time. But in total, in aggregate, we saw about $4.1 billion sold on Black Friday. That's a 22% increase since last year's Black Friday, which is about 3.36. But another thing to remark about is the velocity. We start tracking Black Friday, Cyber Monday from midnight UTC in Europe. We saw merchants cross the $1 billion mark before midnight EST on Black Friday, which was a couple hours earlier than last year. And so, while it's still early on Cyber Monday, I think the thing we're seeing is that shoppers are voting with their wallets to buy from brands they love, both online and in store. We can talk about in store too, and those brands are on Shopify.
Now, how much did it help about your deal with Amazon? Did it make a difference?
I don't understand the obsession people have with TSLY, the yield option for Tesla. Honestly, I think it's like literally the stupidest thing you could own. I kid you not. And I have no horse in this race. I don't care if you buy TSLY, the Tesla option income strategy. I just think it's moronic. The reason I think it's moronic, I'll give you exactly my reasons. Number one, they offer a yield. Okay, the yield is taxable. They have a 1% expense ratio. Well, it's like 99 basis points is their expense ratio. And when they distribute yield to you, you pay taxes. So if you had a yield in the year of, whatever it is, let's say, 20% or whatever, now you're paying taxes on that. So take off a third, and now you're down at like 13%. Well, golly, the SPY year to date has done 19%. So the SPY's done better. But on top of that, the yield doesn't consider the fact that they're vastly underperforming on the actual principal value of the shares. Look at this. If you put Tesla next to Tesla year to date is down 14.9%. Tesla is up 117%. Somebody here says, hold it in a tax-free account. Well, that's fantastic. So put some money into a Roth, but can you do that with a larger portion of your portfolio? I mean, maybe if you want to reallocate into a tax-free account, fine. But that doesn't change the fact that your damn principal is down 15% for the year. So even if you're getting the yield in your Roth, your principal's down, boss. Why would you hold? Why would you not, like in a retirement account where you're supposed to have a long-term outlook? Why are you in a yield max? You should be getting as much capital appreciation as you can, with a long-term bet. So I don't know. Like, to me, it just sounds stupid. Why would I buy, even in a tax-free account, something where my principal value is declining, and it's probably going to continue to do so in an appreciating market? You do this when the market is trading sideways or down. I don't know about that. No. You can't say annualized percentage yield is 60%, because what you're doing is you're multiplying the last 30 days at an annual rate. That's not what you do with a yield ETF. their yield for the last year has been like just over 20%. But now you have to offset this by the fact that you're paying taxes and your principal has lost 15% in value. So if you're up, let's say you're up 25% in yield, but you're down 15% in principal, you have the difference of 10%. So congratulations, you returned 10%. If you're holding that in a non-taxable account, you just got screwed because you had to pay taxes. And if you're holding it, or if you're holding that in a taxable account, if you're holding it in a non-taxable account, great, you underperformed the S&P 500 by 50%. I don't understand what the obsession is with it. I think it's totally stupid. It's the wrong market to be using that strategy in. That's just my take. Sorry, you can't convince me otherwise.
Hearing that from Gymshark, you're not hearing that from Aloe Yoga. What they're creating is this way where not only are they marketing to their consumer every single touch point on social media, on brick and mortar, on billboards, on television and radio, but in terms of how they're purchasing, they're channel agnostic. They want to work, they want to be able to sell in the precise way that their consumer wants. And that might be online, that may be on Instagram, that may be on a marketplace, that may be in a physical store. That's part of the reason why you're hearing us at Shopify talk so much about retail everywhere and building this piece of software so that every consumer, every brand, every merchant is future-proof for the next 10, 20, 30 years.
Just so impressive. Harley Finkelstein, thank you so much, president of Shopify. Congratulations to those 13,000 new businesses that started. That is an amazing figure. Thank you, buddy. Appreciate it.
Thank you.
So here's somebody who thinks the market's going to go lower than it previously did, and then I'm going to flip-flop. Why? Give us some reasons. Tell us, because right now you're just sort of making an allegation. Give us some reasons. Convince us why we should suspect the market's going to go to new lows, lower than what we saw in 2022, when markets were deathly afraid of a Paul Volcker, inflation never coming back down, and a complete great reset. That's the fear we had last year, and it didn't happen. I don't know. Curious to see what you say. Tell us how you really feel. Yeah. Rip. So, okay. Let's see what else we have. All right. So let's go to Cyber Monday forecast boosted on strong holiday spending. U.S. shoppers will spend up to $12.4 billion during Cyber Monday, according to Adobe. After Black Friday topped expectations, up 7.5% from a year ago, according to Adobe. It's for online sales. Pretty cool. Hot items include Lego sets. Dude, Lego is absolutely killing it. Every time I go into a Lego store with my kids, it is packed. That's our Ross Gerber research. You go to the store and you're like, yes, it's packed. HouseHack valuation. HouseHack tattoo at what valuation? I don't know. No tattoos. Maybe a new vest. Anyway. All right. So okay. Let's see. Do we have any did we get any over the weekend Morgan Stanley bear pieces or TS Lombard bear pieces? Those are fun. Somebody did leave me a message and say don't say Society Generale anymore. That you're supposed to say Soc Gen in the finance world. I'm like, okay. It takes a little bit of the fun away, but all right. I guess we'll go with Soc Gen. It's nowhere near as cool. Society Generale is obviously more correct. Oh, well. Oh, well. All right, we are 5 minutes away from the bell. We'll get some data at 7. It's going to be household data. Housing data, rather. Housing. It's very different from household. Get it right, Kevin. New home sales for October Honestly, those would probably be bad. October was tough because those were like peak rates. Rates are down since then. So, yeah. Is it too late for TMF? Not really, in my opinion. I mean, this is kind of where I bought TMF. So, I guess you could say I was too early. Actually, no, I bought TMF a little higher than this. I'm still a little upside down on TMF. so no, it's definitely not too late, says the bag holder. Lego building their first molding factory in U.S. in Richmond, Virginia. Oh, that's cool. That's exciting. Lego School Club of Disney. Oh, wow. Siamond Zandy says, here for my daily dislike. Thanks for the engagement. 40% of the way through Stocks and Psychology. This would have saved me 10 years of trial and error, says Mr. Blue. Oh, wow. That's amazing. Well, thank you for the compliment. The gold course is great, too. I mean, all of them, I think, are great. There's such great value and perspective. So check them out. You can get some sick prices still for Cyber Monday. MeetKevin.com. NVIDIA going to 600, probably, honestly. Because remember, what's supporting spend at NVIDIA? It pisses people off, but what's supporting spend here isn't consumers. It's rich enterprises. So we like that. J. Powell Jr. here says, I'm going to tell my dad to print more money today. They will be taking that money printer back out. It's not if, it's definitely just when. Oh, well, let's see if CPI estimates are out. That'll be cool. So CPI estimates. Let's see. PCE deflator comes out on the 30th. We'll cover that live here. Expecting 0.1 month over month, year over year, 3.1. But nobody really cares about that other than, the Fed says they do. So let's instead go for some juiced CPI predictions. CPI. Nope, they're not out yet. How disappointing. Next CPI read is going to be on December 12th. Why is that such a mouthful? 12th. Like, all that mouth moving you have to do to say 12th. That's hard work. Unless you're German. You're just 12th. That way you have a little bit of the angry 12 in there. 12th. But then also like not doing your TH. 12th. Anyway. All right. Like a minute or so from the bell here.
Everything, because they keep pursuing it at Crown the fiber small cell strategy, which every year is viewed as being immature but supposed to be okay. It's obviously wrong. And AMT, American Tower, and SBA have committed to international towers where the growth is, because obviously Verizon doesn't have a lot of growth anymore, and nor does our friend.
The weak economy in China is deflation for America, right? They're exporting deflation to us. It's fantastic. I don't know that I have the song on a button. I should add it. I do have this on a button.
Just close the fucking door. Close the door.
Into a U.S. tower multiple, if you look at SBC or AMT, and it's higher.
Yes, Bradley, the new Burst Pro courses are live. That's the gold course. It's 10 hours. 10 hours of content. It's diverse, good, crash course information. I actually think it's some of the best content I've created. I slave for that content for you.
Yes. You know what, David? It yields 6, but not because they keep raising the return.
It's because the stock has come down.
These guys are so obviously the worst in the group.
Yeah.
They stick by this idea of continuing this to a technology that may not be so great. So I say I am with Elliott, not with management.
Let's get the opening bell here in the CNBC real-time exchange. The big board Brazilian.
Why does it so red? What the hell? Why does that look so red? I don't want to see that crap. Get out of here with that crap. All right. NVIDIA up 30 basis points. Just shot positive there. Out of nowhere. It was negative. Tesla up 64 bips. Not moving anywhere close to NVIDIA's movement here. Let's see how that lasts. We've got The VIX, well, the VIX is probably going to take a few minutes to actually update. Let's go see the movers here at the beginning, and also the Qs. QQQ up about 10 basis points, went positive actually on the Qs. No way. At least on the opening trade there. Apple went positive on the opening trade. Wow. How about MSFT? Positive on the open trade. These were all negative pre-market. Google went positive on the open trade. Oh, Tesla plummeting. Who knows what's going to happen? It's about to turn red. Oh, no. Quick, look away. All right, let's go see what's going to the downside. Affirm's up 5%. Affirm's popping. You've got Enphase down about 1.36%. MP Materials down. SolarEdge down. Spirit, Redfin, HP, Disney, C3AI. These guys all down. Affirm, look at that move on Affirm. 6%. Holy smokas. Somebody here writes 73% red at the open there. Yeah, almost looked a little more red. Good call. But Affirm really popping here. Tesla. Oh,
Lost the lead. Lost the lead.
Just straight candles going straight down. Affirm, on the other hand,
Gained the lead.
6.5% here on these retail sales numbers. It's pretty exciting. Let's see what, today is like a pretty dang boring news day. I'm telling you, trying to find news. It's like, this is ridiculous. Goldman now says the shine is returning for gold as investors see rate cuts ahead. Okay, Goldman. Okay. Mounjaro more effective than Ozempic, study says. Okay. We talked Elon Musk a little earlier about him being in Israel to prove he is not a Jew hater. I don't believe that. I think most people don't believe that. The advertising revolt is a little excessive. Some people now saying that Taylor Swift is even stopping her posts on Twitter or X because of this. Who knows? So, all right. Let's go take a look at what the Wall Street. Oh, yep, there goes the Nasdaq has also
Lost the lead.
Oh, okay. Let's see what they're saying here.
Tell me, please. We're here to help you.
Oh,
Yeah, we're here to help you.
well, that's going to be better when they have generative AI because they'll be able to just get right on top of it for you.
Look, they don't have feelings. If you prick them, they don't bleed, David.
We do have.
Who's that?
That was Shakespeare.
Which guy?
Oh, come on.
No idea.
Wait.
Who said
It was Shylock.
Yeah, for poisonous. Do we? The
from
bots
Merchant.
you poison them,
Merchant.
they don't
Boring.
die.
Yeah.
All right.
Hath a bot not hands?
Oops, I went too far.
That bit, okay.
I pressed the button too much. Come on, Fox Biz. Yeah, we'll just watch Christmas movies
Monday
together.
morning, we're really going nowhere so far. That's a tiny fractional loss here, down 16 points, 35,372. Show me the Dow winners, please. Let's go through these. These are winners as of this morning. Salesforce on that list again. United Health, Travelers, 3M, Merck.
Bro, those are barely winners. They're up like a quarter of a bip. Who cares? Well, a quarter of a point. So here we go. Bank of America Securities inflows into high-grade and high-yield funds have accelerated over the past week. Not only that, but for another week, Euro-focused, European domiciled high-yield funds recorded sizable inflows. People trying to get more yield, baby. Look at these flows. Wow. Look at those outflows out of equities. Boy, I think that is setting up for such massive mispositioning. I mean, think about what people are doing. They're investing in money markets. They're going heavier into cash at a time you probably should be considering equities. And but no, wouldn't want to do that. Yeah, that's wild to me. Multi-year high risk-free rates have pushed more investors to own less risky assets. These are flows. These are inflows. So inflows, doesn't mean like total flows. This just means inflows into stocks, negative, which means you have outflows. Oops. Wow. Flow, chart book, time frames, mostly short and medium term, less long term. But people aren't locking in for the long term. That's also weird. It still implies some fear in the markets. Maybe people think prices will go lower again. That's possible. Yeah, that's interesting. Boy, that's some big exposure to cash. What about here?
Donald Trump was president at this time. Can you imagine what the scenario would be in the Middle East? It would probably be the United States and Israel.
Oh, don't you worry, Macaroni. Inflation will be transitory.
Iran, Hezbollah, and Hamas.
That's the famous Eric Schwalwell. He should remember that there was peace throughout Trump's entire presidency. Biden's green push faces renewed scrutiny. Climate change didn't even make the list of top 10 issues for voters in the latest Fox polls. When do we stop pouring money into this and focus on the real issues? Stephen Moore on that next.
All right, let's see here. Here's SocGen, Societe Generale. I still prefer that, but I was instructed to say SocGen. All right. U.S. focus back on growth. Expectations of rate cuts in the first half are primarily built on inflation receding. In our view, to induce Fed rate cuts, we would need to see rising risks on the economy. After a real GDP print of 4.9% in 2023, evidence of slowing is natural, but that is not the same as a potential recession. Next week, consumer confidence and ISMs come out, biased to the upside. You know, what I like looking at is the Atlanta Fed GDP Now read. Let's take a peek at that. Sitting now, last read at 2.1%. Next update is in 3 days for this. So you can see it's been a little volatile here. Very interesting. Okay. So let's see here. Greed and fear index at 67. Strange compared to the, what's it called? The flows. Well, so the greed and fear index doesn't just consider flows. It also considers price. You know, it really depends on what their greed and fear index is made out of, whichever one you're looking at. But yeah, I mean, let's just Google one really quick here. Stock greed and fear index. Okay. I mean, do I really want to click the CNBC one? Or sorry, the CNN one? Oh, here we go. Business Insider. Anything else, please. So where do they mention it? Greed and fear index is based on the premise that, okay, what it is calculated based on 7 equal weighted indices. Well, I want to know what those indices are. Remained in the greed zone. All right, whatever. Maybe CNN's will give us an explanation of what. See, when they put us at greed here. Okay, 7 greed and fear indicators. Market momentum. Okay, so actually this one's not that bad, the CNN business one. I have to say, it's not that bad. They break it down. Market momentum. Okay, well, see, that doesn't have to do with flows. That's why you can measure greedy. Stock price strength, that's fine. Breadth, how much is going up versus how much is going down, that's fine. Put call ratio, that's fine. Market vol, low. Okay, safe haven demand is at extreme greed. How interesting. Difference in stock and bond returns. Junk bond demand. Okay. Yeah. I mean, I don't know. I mean, all of these things are going to have weakness. But yeah, it is interesting. But none of their measures have to do with, none of them, actually. None of their measures have to do with flows. It's really just, it's mostly price movement. 1, 2, 3. 3 out of the 7 have to do with price action. A couple have to do with bonds. and one has to do with options. I don't know. That's not. I don't know how useful of a tool that actually really is. Oh, Nasdaq's trying to come back. Okay, only down 12 basis points right now. Let's go. There's hope. There's hope. Tesla. Oh, I see a green candlestick. Let's go. Yes. What's this button, by the way? Is this sell, 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 or buy, buy, buy?
Sell, sell, sell.
Dang it. Oh, and now the candle's turning red. I shouldn't have pressed it. Sorry. Trying to see what the suits are saying. Honestly, oh, wow. Affirm's now up 10%. Wow. Guess that company ain't going bankrupt after all. Where did I sell that sucker at? I think I rode that thing way too long and way too hard, but sold somewhere between 60 and 80, I want to say, on average. But I did rebuy there for a period in the 30s, and then I resold in the 30s. I think I got nipped a little bit on that one. So I was definitely playing this for a little bit. But I certainly didn't ride it all the way. But now, wow, look at this rebound, man. 11%. It just keeps going here. It kind of makes me want to look at their actual earnings really quick. Let's do it together. Investor relations, Affirm. And then we have work to do in the Course Member Live. Remember, today's Cyber Monday. So go to meetkevin.com. Snag the best prices available. Price match guarantee. Okay, so let's go grab their filings. 10Q. Here we go. Okay. Let's see. Do they make money yet on their crap? Total revenue, 496. Nice growth. Sales and marketing. Wow. Yeah, okay. Look at that. Sales and marketing shrunk. Sales and marketing shrunk, and their revenue still popped off. Very good. Very, very good. Still a massive operating loss, though. $209 million. Net loss after other income, $171 million. Okay, so we're still burning money. All right. What's their cash flow? Oh, they have operating cash flow. How'd they get operating cash flow? How'd they pull that off? Okay, well, that's because they're selling the loans off. Okay, yeah, that makes sense. All right. But still, from an operating point of view, losing money. And then loans held for investment. Those are just loans. Cash. Got a billies of cash. Okay. Got some money here to pay the bills. That's great. Convertible notes. Okay. Funding debt to try to make the loans that they're buying and selling. Well, it's actually not that horrible, honestly. 12%. All right. Let's watch now. Top news. See the suits? See the suits? Yeah, these are the average candlesticks. They're a little easier to trade with than the normal sticks. You know, the normal sticks are gonna look like this, but that's gross. I like this average. Okay. Wow, the suits are so quiet today. Whatever. Anyway, make sure you're back here tomorrow at 5:25 in the morning. We'll cover the news again. Optimistic stock 2024 forecast disguise potential losses. Strategists are moderately optimistic on stocks for 2024, but even conservative projections conceal the tough ride ahead. The lagged impact of rate hikes will eventually hit stocks, and the recovery could be painfully slow. Ooh, creepy. All right. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or for products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Well, folks, there you have it. We'll see you tomorrow for the course member or the public stock market open live stream. Now I'm going to pop on over to the course member live stream. See you there next.